Welcome back, my friends. What a week it was. 3 United States banks failed within the past week. And now everyone is wondering what will happen next. And crypto was somehow involved in all 3 bank failures. Now it seems that First Republic Bank is the focus of regulators. First Republic said Sunday it had received additional liquidity. This came from the Federal Reserve and JP Morgan Chase. The bank said the move raises its unused liquidity to $70 billion. That is before any funding it could get from a new Fed facility. The Federal Reserve created a new bank term funding program over the past weekend. The new facility will offer loans for up to a year to banks. The loans would be collateralized by U.S. Treasuries. Startup-focused Silicon Valley Bank collapsed on Friday. That was the largest bank failure since the 2008 financial crisis when Washington Mutual collapsed. New York-based Signature Bank was taken over by regulators on Sunday. And Silvergate Bank liquidated last week. As many of you may have heard by now, cryptocurrency exchange FTX filed for bankruptcy protection on November 11th. Since then, the entire crypto world has been reeling. There have been a number of other crypto bankruptcies since then. And many other cryptocurrency companies are teetering on the brink of bankruptcy. The meltdown in the cryptocurrency ecosphere shows no signs of slowing. So, will crypto cause the meltdown of more banks? What does this mean for the US economy? And, what does this mean for the future of the United States? But, before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. First Republic Bank led a decline in bank shares Monday. This development came even after regulators' extraordinary actions Sunday evening. The United States government moved to backstop all depositors in failed Silicon Valley Bank and Signature Bank, which was taken over by federal regulators on Sunday. And it will also offer additional funding to other troubled institutions. San Francisco's First Republic shares lost 61.8% on Monday after declining 33% last week. PacWest Bancorp dropped 45%. And Western Alliance Bancorp lost more than 47% as regional bank stocks fell sharply. Zions Bancorporation shed about 26%, while KeyCorp fell 27%. Other financial firms were also under pressure, as Bank of America slipped 5.8%, while Charles Schwab tumbled more than 11%. Many of the bank stocks were halted repeatedly for volatility throughout the day. But First Republic Bank seems to be the main focus. First Republic Bank is a private bank headquartered in San Francisco, California, USA. The bank was founded in 1985 and operates in more than 80 locations in the United States, including New York City, Los Angeles, and Boston. First Republic Bank offers a range of banking products and services, including personal and business banking, private banking, wealth management, trust and estate services, and lending solutions. The bank is known for its personalized service and high-touch approach. It caters to the needs of high-net-worth individuals, entrepreneurs, and businesses. First Republic Bank is also known for its conservative lending practices and high credit standards, which have allowed it to weather economic downturns and maintain a strong financial position. As of 2021, the bank had over $200 billion in assets, and was consistently ranked as one of the best banks in the United States by various publications. But that seems to have changed. First Republic Bank seems to have become more focused on cryptocurrency companies. On Friday, Signature Bank customers spooked by the sudden collapse of Silicon Valley Bank withdrew more than $10 billion in deposits. That run on deposits quickly led to the third largest bank failure in U.S. history. Regulators announced late Sunday that Signature was being taken over to protect its depositors and the stability of the U.S. financial system. I think part of what happened was that regulators wanted to send a very strong anti-crypto message, said board member and former Congressman Barney Frank. The stunning collapse of Silicon Valley Bank roiled global markets, and it stranded billions of dollars belonging to companies and investors. Traders have been on guard this week for signs of contagion in the financial sector. They are looking for contagion from troubles for Silicon Valley Bank and from crypto-focused Silvergate Bank. As you probably heard, Silvergate Bank disclosed plans to wind down operations and voluntarily liquidate. Financial regulators closed Silicon Valley Bank on Friday and took control of its deposits. The Federal Deposit Insurance Corporation was named as the receiver. The collapse left companies and wealthy individuals largely tied to the tech sector unsure of what will happen to their money. According to press releases from regulators, the California Department of Financial Protection and Innovation closed Silicon Valley Bank and named the FDIC as the receiver. The FDIC in turn has created the Deposit Insurance National Bank of Santa Clara, which now holds the insured deposits from Silicon Valley Bank. The FDIC said in the announcement that insured depositors will have access to their deposits no later than Monday morning. Silicon Valley Bank's branch offices will also reopen at that time, under the control of the regulator. The FDIC also said Silicon Valley Bank's official checks will continue to clear. The FDIC's standard insurance covers up to $250,000 per depositor, per bank, for each account ownership category. It is unclear exactly how larger accounts or credit lines for companies will be impacted by the closure. The FDIC said it will pay uninsured depositors an advanced dividend within the next week. As of the end of December, Silicon Valley Bank had roughly $209 billion in total assets and $175.4 billion in total deposits, according to the press release. The FDIC said it was unclear what portion of those deposits were above the insurance limit. Silicon Valley Bank was a major bank for venture-backed companies, which were already under pressure due to higher interest rates and slowdown for initial public offerings. The closure of Silicon Valley Bank would impact not only the deposits, but also credit facilities and other forms of financing. The FDIC said loan customers of Silicon Valley Bank should continue to make their payments as normal. The move represents a rapid downfall for Silicon Valley Bank. On Wednesday, the bank announced that it was looking to raise more than $2 billion in additional capital. That comes after suffering a $1.8 billion loss on asset sales. The shares of parent company Silicon Valley Bank Financial Group fell 60% on Thursday. Then, they dropped another 60% in pre-market trading on Friday before being halted. Just a month after FTX declared bankruptcy, investors are nervous about Binance. Binance's native token, which is called BNB, has plummeted 15% in the past week. That includes a drop of over 6% in the past few days. BNB was first introduced to the world in 2017. Actually, BNB is the world's fifth most valuable cryptocurrency token. It has a market capitalization of around $39 billion, behind only Bitcoin, Ethereum, Tether, and USD Coin. The latest conundrum looming over Binance is FTX's bankruptcy proceedings. Binance was the first outside investor in FTX. But Binance decided to sell out its equity position in FTX last year. Binance sold its stock in FTX for $2.1 billion. Binance CEO Changpeng Zhao has been trying to reassure investors. He dismissed concerns that Binance could have that money clawed back. The crypto crash rages on. Cryptocurrency projects have collapsed and bankruptcies have occurred across the crypto industry. Warren Buffett, CEO of Berkshire Hathaway, has repeatedly said that cryptocurrencies are worthless and have no intrinsic value. Buffett says that cryptocurrencies have no value in the economy or to society. He clearly thinks that the current crypto winter is a prelude to the eventual death of cryptocurrencies. In January, few people would have predicted that this crash would happen. Regular people who never even traded stock were suddenly active in crypto trading. But, what do you think? Please hit the like button and leave a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.